really looks like. It's from that sweep to the top side here, doesn't it? Look at that sweep to the top side. You see that? You see that beautiful sweep to the top side? Now you might say, but I don't see where the switch is. Well, the switch was the cash open, wasn't it? You know, so when you saw the sweep to the top side to get liquidity, and then you saw it sweeping back to the downside here, and then you see this pin candle coming in here, suggesting that the sellers are stacking the offer, you don't have any choice. I mean, it's sell side only at that stage, isn't it? I mean, it's just a straightforward short sell in the next candle then at that point. It's just an all-in maximum short. And off she goes like a train. I mean, it literally is off she goes like a train. It's 2150, 25 150s down to 20s. I mean, 130 points, $2,600 of sell side profits. Concerns about shutdown. I mean, we said in the conversation this morning, we thought it was a bit cheeky, but we knew why the buyers still wanted long equities. We just didn't necessarily agree with it. But we knew why they wanted, and it's a kind of balanced picture. I mean, it's not exactly a capitulation sell-off, is it? I mean, it's just a small pullback, really, in the grand scheme of things. But yeah, I mean, it's a pretty obvious trade, pretty easy. And again, looking at the big boys, there was really no question pre-market what these guys were going to do, is there? So when they're coming in that heavy, the market maker is massively incentivized to try and achieve this outcome, because they're going to get absolutely mauled if they don't get short inventory ahead of this cash open, aren't they? Does that make sense, Theo? Imagine, just picture, for example, this is the big commercial sellers coming in at bottom tick prices. If the big commercial sellers have been consistently heavy selling this, way more than the price, that's because there's a deal going, isn't there? There's a deal going. If the price hasn't gone yet, there is a deal in the back office. We'll sell it if you give us the volume, but we just won't mark it down. We won't pull away yet. So if you're going to give them a deal at these prices to get volume pre-market, you're giving them 150 for a sell order. You're giving them 150 for a sell order. Now you're giving them, as you can see up here, you're giving them 170s for a big sell order. And remember, a lot of this will be off exchange, right? It'll be dark pools, it'll be blocks of stocks, it'll be trackers, it'll be lots of different things, right? It's not just on the futures contract. It's everything else, almost bar the futures contract. The Qs, for example, would be one. The SPY would be another one. So there's a lot of trade getting done here that you don't see on this chart. There's nothing in this chart in terms of volumes, really. But what we do know is there's a lot of selling coming in, and a lot of selling coming in at pretty chunky high prices. So the market maker's now incentivized with that amount of selling coming in at these elevated levels. If I can just pick off a top edge, the market maker is going to be really quite active in trying to get into that top edge price prior to the breaker, which turns out to be a spectacular swing to the bottom edge from that little sexy piece of information right there. You couldn't make it up, could you? It's just too good. It's just the value of seeing these areas, isn't it, ultimately? Especially at the right time of the day, doing the right things. And recognizing that we've got something going on that we need to be looking for as a trade opportunity.